Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we had another exciting day, another vertical day. We're up over 3% since the lows on Sunday night. So we're just seeing this market just scream, everybody's buying, but I'm just wondering right now who's left to buy after all of this incredible action that we've seen over the last couple sessions. Now we're coming into a critical level on the markets as we come into ADP report in the morning, then claims, and then unemployment on Friday, not to mention on Thursday a monster amount of earnings to come out, and also we have plenty coming out tomorrow. Now, no big surprises from Amazon or any of the others. We basically seen things come in line. Jeff Bezos steps down, who cares? You know, the basic backdrop in this market isn't worried about any of the fundamentals right now. We know that the Robinhood banking crisis is over, the world has been saved, and meanwhile, most likely, Robinhood guys sold their souls to save the company. They've raised $3.5 billion. And so this is going to be interesting to watch this saga continue to unfold. So everybody's happy, GME's down, AMC's down. Silver, that trade that I covered in last night, I mentioned that I thought we would go back to the 26 handle, 26.50, possibly 25.80. We did exactly that. Silver was down 10%. It's not like these folks are going to be able to just come in and disrupt the markets and attack markets. They got away with GME and it made sense, and you got 140% short stock, you're going to be able to manipulate it. But as we come back into reality, we're also going to be looking at things that matter, which are the economy and other elements that we're going to be looking at that I mentioned just a minute ago, such as the earnings and the economic reports coming out. So I do expect to see, as I mentioned, a 3-day rally. We've had 2 of those days. They're much bigger in magnitude than I thought we would get to. Yesterday was somewhat insane from the standpoint that the machines were running it and they just kept driving this thing up. And we've actually seen, which I'll go through in the details in the technical section here in a minute, we've actually seen the extremes being hit on the futures and on the cash on the S&P. More on this in a few minutes. But the database seems to have stalled out as far as the liquidation goes. A lot of things are happening. I'm going to keep this video somewhat brief tonight. We have a live stream at 1:30 tomorrow. I'll cover all the details. I've got a lot to talk about tomorrow. So make sure that you watch the replay or try to join in on the live stream tomorrow. So let's go ahead and look at the charts, see what they're telling us for Wednesday. As we begin with the WaveTech Database, we did see a substantial amount of buys come back in yesterday. We dropped down to 27% bullish. We're back at 33.81. We actually saw 2,100 buy signals with 260 sell signals. So a very bullish ratio coming out of the database yesterday. So that rally generated a lot of new buys. On the sectors, we actually saw on a short-term viewpoint, we saw consumer non-cyclical and technology come back into play, which will be a buy for the opening in the morning as well. So this is a substantial turnaround. As I mentioned last week, I thought if we got down to around 28, 22%, that the database would flatten out there. So we're definitely seeing a positive rotation. As I mentioned in Sunday night's video, we also saw some further buying on the weekly model, so we're continuing to see an expansion of the trend. So regardless of what looked like was going to happen on Friday, we saw the market actually reverse on Sunday night, and all of a sudden the bid is back on the market. So we've moved very quickly. As I mentioned in the opening comments, I'll go through the details on the technicals here in a minute, but we definitely saw a monster reversal on Monday, and then we've seen this continue yesterday, but this is also being reflected in the database. So I expect to see this market continue to remain stable. We're likely to see some very sloppy trading because we're seeing some of the activity I'll go through in a minute on the technicals actually not fully participating, but that doesn't mean we're not going to continue to grind in this sideways range. So the downside potential was fulfilled, in my opinion, on Sunday night's open, and everything has turned back around. So now we're back into digesting what was going on prior to the whole Robin Hood banking crisis idea. As I review the S&P futures, we are up 17 handles overnight, back at 38.35. We're seeing the market follow through. Looking at the market grid for today, we'll see that the R1 number is at 38.41. So far overnight, we've had a 38.39.25. If we get through that level, next level is 38.66, which is going to put us at an all-time new high in this pattern. Now, this pattern that we're seeing, we saw the big reversal pattern on Monday, followed through yesterday. It does appear that we're going to see a continuation here for possibly 2 more days. I originally advertised this as a 3-day rally. Today will be incredibly important if we're able to close higher, and more importantly, if we can close above 38.41, above R1 today. That will signal further follow through for Thursday's market. So today will be a critical day in the pattern. It will take a close under S1, which is 37.95, to actually signal a reversal of this 2-day rally that we've seen. Now, there are some possibilities as we look at PPM1. It is not participating. This is what I was talking about a minute ago, is that the PPM1 is actually turning down. It's not showing any short-term momentum burst. So this is suggesting that we could fall back into the range, but PPM2 is breaking through its first and second derivative. PPM3 is also downticked a little bit, and this is reflecting the 17 handle move overnight. As we look at the SPX, market grid for tomorrow suggests that 38.41.57 is one of the key levels that we're going to be looking at. Yesterday's high was 38.43.09. The grid suggests that we are likely to potentially move to an R2 number, 38.58. And if we go back to the highs of the pattern, 38.70 was the high of this market. So we're looking at an R2 would signal the breakout. R3, 38.75 would be an all-time new high. So we are seeing this acceleration in this pattern. And based on what we're seeing in the futures overnight, we're likely to see the PPM2 move up through its first and second derivative, but PPM1 and 3 stall. We'll have to see if we can get through some of these numbers I just discussed. Next market I'll cover is the NASDAQ. We're up 95 handles, up almost 0.75% overnight. We're moved up to the 13,542 as we look at the market grid for today. 13,646 is R2. We printed above R1, 13,000. We printed above the R1 number so far tonight at 13,542. So we are looking at the potential to move to at least an R2, possibly as high as R3, and that would put us at the 13,750 level. Key level on the downside, 13,355. That's also representative at the 10-day moving average, 13,315. That's very solid support. But as in the S&P, we're not seeing an acceleration. It's the exact same formation that's in the S&P, is where ppm 1 and 3 are not participating. ppm 2 is slicing through its first and second derivatives. Overall, this is a basic positive pattern, which suggests we're likely to continue higher with that major support at that 10-period moving average 13,314. The final market that I'll cover tonight is gold. As we look at the daily gold chart, we did see a hard sell-off yesterday. All of the metals sold off. The dollar was actually able to rally. This put a lot of pressure on the metals. And of course, we know that the failure in the silver market that occurred yesterday, and that was basically very predictable, as I talked about in yesterday's video. But we're looking at now the potential for some further downside down to the 1856. I discussed some of these numbers on the weekly chart, and I'll go through that briefly here in a minute. Did have that big reversal. We reversed right off of the moving averages that I discussed yesterday at the higher end, where we were looking at the 1867, 1869 level, the high yesterday, 1866. So we came up pretty close to those levels and reversed. As we look at the weekly chart, this is the levels that I was talking about last night. 1837 was S1, S2 is 1822. We had a low so far this week of 1830, so we could see this continue down toward this level. The potential still exists for a move down toward the 1807 to the 1794 level. So this market is likely to stay under some pressure. The only positive that's going on is ppm 1 is turning up, which does suggest that there is somewhat of a magnet around the 1860, 1859 level for the market to rebound back to there. It's going to be a fairly volatile market, it looks like, for a couple of days. The low end between the 1822 and R1 1863 on the weekly charts. This will complete the video. Looking forward to seeing you all at the live stream tomorrow. Thanks for watching.